All right, traders, I am back again with another video. In this video, I just want to take a look at the Bitcoin US dollar. A lot of traders want to look at this, and to me, I don't really want to look at it. It's nothing I'd be concerned with at this point if you're trying to buy it. But really, everyone's concerned about the decline of this asset, but you shouldn't be too worried about it at this point yet because basically this market has not had a true correction like this since its inception, really. So to see a correction like this and a big correction like this, it's just part of the market. And if this is going to stand the test of time, it has to go through these um, you know declines and corrections and so forth. So this could be just a correction where we find this market correcting itself and then moving back to the upside, because you got a correction here. So you had your big impulse wave, then you got a big correction, and then you might see another move to the upside. All right. So you could quite possibly see it form. There's so many things that you could say that could happen with this thing. So you just would be guessing at this point, because really you could see it's declining, and to guess that, oh, it's going to stop and then turn around here and do this, you're basically just guessing what the market might do. But you look at this top level here, so you want to watch when the market gets back to this level and see if that level is going to be a resistance level, because at that point you'll probably be a double top. So the market could do something to this effect as we see it dropping to the downside and then eventually correct itself and then work its way back up to here. And then this would be a double top where we would look at resistance and possible another possible correction. All right, and drop to the downside. That's one thing that you could look at. And then the next thing you're going to look for is where are your levels where this thing could line out and then start looking to move back to the upside. Where could you look for a possibility to buy this asset? Um, I do see that this level here, and I always pay attention to these rejection levels. I want to see the market come down and violate a rejection level. So if I was looking at this, I would take note of this level because I want to see what the market's going to do when it gets there. Why did it reject off of that level? But to me, there's a relevant level that could become important, which would be this level, where it would be, this was a resistance level turned support a little bit. A minor level per se, but you have to have something to go by, and based off of how where this market's been and how new it is, basically you don't have a lot to go by to your left. You need some information from your left side to really determine where these strong support and resistance levels are. So this is going to be one level that we mark. You can see we are in a decline. We're bouncing off of the top of the Kijun here and the bottom of the cloud pretty much. You could see that bounce here and the market continued to the downside. You had a inside down pattern, and then the market moved to the downside. Um, Basically three inside out and the market moved to the downside. We dropped to the downside. I'm looking to see where we could possibly turn. So this would be one of the levels that I would look at. Currently, I wouldn't do anything with this if you're looking to buy this. There's no level yet. Wait to see what the market does here or at this point. Now, another thing that you can look at is the market likes to move in one-to-one ratios, and we use a lot of wave pattern formations when we're looking at the market when using Ichimoku, the advanced Ichimoku, because Ichimoku is based on three theories, three concepts. All right, which would be your price, time, and your observation theory. So we're looking at these, and the one thing I want to look at is the one-to-one ratio, which is going to be like an end pattern. And the one-to-one ratio helps you sometime to see where the market could be moving to. All right, so if I just mark this low here and don't take into account this level, then that level would be, we'd be looking at these levels where where you could see my targets. So this would be one of the levels here. This would be our next level, pretty much where that resistance, where that support level lines up at 78.07, and then the next level will be down here at 5269.5. All right, but I guess I would have to take this into effect, being that the market really moved that low and you have that big rejection. So with the one-to-one ratio, and I really don't like to use those big wicks because they're not the norm of the market. You don't see those throughout, but you see a couple of them here. Nice little rejection here. We're trying to also see about this rejection. I'll talk about that in a minute. All right, so when you look at the market moving down to this one-to-one level, we're right here at 83.78. 78.9, right? That's going to be, well, actually our 1-to-1 will be 76.86. 76.86 for the 1-to-1 ratio, but I'm looking between these two levels, 83.78.9 and 7686. That's going to be our little zone where we're looking to see what the market does at this point. So we really want to hold off and just wait to see what the market's going to do at this point, because if this is just a correction, then we could get back into the market to the upside. So I don't really know. I mean, if I want to continue to look for trades to if I was trading to the downside, it would be totally different, but the market already violated levels that we would look to get into the trade, so we'd be kind of late. And then we still want to see levels get violated that haven't been violated, so I'll talk about one of those levels. So those were the levels that I'm looking at to see if the market can come back to these levels and give us an opportunity to get into a trade. Now there's no divergence here, so I'm not going to really talk about that. That's not showing any weakness here. But the level, this level, for the market to come down to this point, I always like to make these levels like zones. All right, support zones or resistance zones, and then I want to see what the market does when it gets down to that level. Is it going to go all the way down to that level, or is it going to change and go back to the upside? So I like to mark those levels to see what the market's going to do at that point. So it's in this whole area down here is a level where we may see the market pause and find some support around the 7807 area. All right, so currently I wouldn't do much with this. There's not much to really do. I mean, if you want to look long for this thing, and if you're thinking this is going to recover, there's not a chance to get into the market yet. So I would just hold on, be patient, and wait. Other than that, guys, it's really hard to trade something when there's nothing. All right, so the only thing that you could look at is that the possibilities of this going more to the downside, and those were the levels that I was looking at. That's going to be it for this. Hopefully this helped you out a little bit. I mean, not much to really talk about, but we still want to keep our eye on it and look at those levels, be aware of the levels where the market could go. Once the market gets to a level, that's when we start to really emphasize what we want to do, because then we look at that price action, and then once that price action triggers us, we're into an opportunity to get into a trade with an asset. So those are the basic things, basic concepts, and that's what we're looking at. Pretty basic right now. All right, till the next time, guys, I hope you enjoyed this and have a great one. God bless. So long.